Welcome to the Deep Dive. We're here to cut through the noise and really give you the essential insights, help you grasp what's truly happening in our world. Today, we're jumping into what feels like a global chess match, where the pieces are entire economies. And the big moves, well, they're announced right on national TV.
Yeah, it's quite something. We're looking at a really striking development, the U.S. deciding to impose these secondary tariffs on India. It's a story that's definitely sending ripples across trade, diplomacy, global security, lots to unpack.
Absolutely. And our mission here in this deep dive is to get to the why behind this pretty bold move. What are the immediate consequences? And maybe the longer-term shifts in global power dynamics. We want to go beyond those headlines, connect the dots for you, and maybe uncover some surprising facts along the way.
Sounds good. Maybe we should start with the announcement itself. It was very public, very direct, really set the stage.
Definitely. Okay, so the scene is August 24th, 2025. Vice President J.D. Vance, he's on NBC News Meet the Press, an exclusive interview. And he says it outright. The U.S. is using, and this is his term, aggressive economic leverage, specifically the secondary tariffs on India.
Right, secondary tariffs. So just to be clear for everyone listening, these aren't taxes on Russia directly. It's on countries, like India in this case, for doing business with Russia. The idea is to pressure them to fall in line with U.S. sanctions.
Exactly. And the goal here, explicitly stated, is to pressure Russia to halt the conflict in Ukraine. And this isn't just some vague threat anymore. It feels like a real escalation.
It really is. I mean, the groundwork was laid a bit earlier, but things moved fast. There was already a 25% tariff on Indian goods. That was put in place around August 7th, 2025.
Okay.
Then, just the day before Vance's TV appearance, August 6th, boom, an extra 25% penalty gets announced.
So that brings the total to
A whopping 50%.
Yeah.
And these aren't just proposals floating around. They're set to kick in fully very soon, August 27th, 2025.
50%. Wow. That's a massive figure. It's designed to hurt, clearly.
And it's strategic, too, right? Not just a blanket tax. They're aimed squarely at India's key export sectors to maximize the pain, I suppose.
Precisely. We're talking pharmaceuticals, textiles, electronics.
Yeah.
Big ones. These sectors together, they account for something like $74 billion in trade with the U.S. That's a huge chunk of India's export economy suddenly facing this massive tariff.
74 billion. Okay, so to understand why the U.S. would take such a drastic step, we need the backstory, right? The context of the Russia-Ukraine conflict.
Absolutely. You have to zoom out. The conflict, now in its third year, has just fundamentally reshaped, well, everything. Global alliances, economic strategies, you name it. Russia found itself facing heavy Western sanctions, so it had to pivot. It needed new markets, especially for its energy.
Right. Russia's looking for buyers. And then there's India. Huge energy needs, growing economy, 1.4 billion people. It seems like a logical customer for discounted Russian crude oil.
It does, on the surface.
Yeah.
But it was a calculated move by India, knowing the U.S. position. Yeah, because the numbers are stark. Before the war, Russian oil was, what, tiny?
Yeah.
Like 0.2% of India's imports?
Tiny, negligible, and by 2025, it's skyrocketed. Close to 40%. That's not a minor adjustment. That's a fundamental shift in their energy sourcing.
40%. Okay. So India sees it as securing energy, saving potentially billions, crucial for their growth. Makes sense on their side.
Essential for their development needs. But the U.S. perspective is very different. Washington sees these purchases as, well, indirectly bankrolling Russia's war effort. That's the core disagreement.
A charge India has consistently rejected, right?
Consistently and firmly, yes. They maintain it's about market dynamics and national interest.
In this whole situation, this U.S. move, it fits the Trump administration's playbook, doesn't it? Using tariffs, economic pressure to force outcomes, in this case, trying to broker peace in Ukraine by targeting Russia's trading partners.
It aligns perfectly, that hardline approach.
Yeah.
Use economic tools to achieve geopolitical goals.
So, okay, that's the background. But what about the mechanics, the strategy behind the tariffs themselves? Vance laid it out pretty clearly.
He did. He said President Trump is applying aggressive economic leverage, his words again, to try to make it harder for the Russians to get rich from their oil economy. It's very direct.
No ambiguity there. The core goal is just to hit Russia's oil money.
Exactly. That oil revenue has been a lifeline for Moscow, especially with all the other sanctions. So the thinking is, squeeze that lifeline, disrupt the cash flow, and maybe, just maybe, they'll be forced to negotiate a ceasefire.
It's economic pressure aimed squarely at a political result.
Precisely.
It's interesting, though. Vance also mentioned some diplomatic optimism. He referenced those recent talks between Trump and Putin in Alaska, August 15th.
Right, those talks happened. No formal ceasefire came out of them, not yet anyway. But the U.S. clearly hopes that adding this economic pressure, this squeeze via India, will act as a lever, get Russia back to the table, maybe this time with Ukrainian President Zelensky involved.
So the message is kind of a stick and carrot. Stop the aggression, and you can rejoin the global economy. Keep going, and the isolation deepens.
So that seems to be the signal, yeah.
Yeah.
It fits that pattern we've seen President Trump's mix of, economic hardball and diplomatic overtures.
A mix that's had, let's say, varied results in the past. Applying it to India, though, a major rising power, a partner in some areas. Does that risk backfiring, alienating them?
That's the big question, isn't it? Because India has not reacted passively. Not at all.
No, their Ministry of External Affairs, the MEA, put out a strong statement,
Yeah.
called the tariffs unfair, unjustified, and unreasonable. Pretty forceful language.
Very forceful. And their core argument remains consistent. And Indian officials keep saying, look, our oil imports, they're driven by the market, plain and simple. And they're essential for our energy security. We need this oil.
And they're pushing back on the idea of being seen only through the lens of the U.S.-Russia conflict.
Exactly. The MEA spokesperson, Randir Jaiswal, made that point very clearly. He said something like, our bilateral relationships stand on their own merit and shouldn't be seen from the prism of a third country.
Right. It's that multi-alignment strategy India's pursued, refusing to be boxed into one camp.
And they're backing it up with action, not just words. Their Commerce Minister, Piyush Goyal, talked about protecting Indian farmers, workers, exporters.
So they're not just complaining, they're planning. Trying to negotiate, maybe.
Yes, intense trade talks with the U.S. are planned. A sixth round is scheduled for late August. They're definitely hoping for some kind of revised deal to soften this blow.
But at the same time, they're also doubling down on Russia.
Well, look at this. Just days after the tariff news broke, India's foreign minister, S. Jaishankar, he flew to Moscow, met with his Russian counterpart, Sergei Lavrov, on August 21st.
Okay. And the message from that meeting?
Publicly, both sides vowed to deepen trade ties. They highlighted that bilateral trade already hit a record $68.7 billion in the last fiscal year.
Wow. So defiance is one word for it.
You could say that. Jaishankar even called the India-Russia relationship among the steadiest in the world after the Second World War. That's a strong signal they won't be easily swayed by U.S. pressure. It's about strategic autonomy.
Okay, but this leads to that awkward question, doesn't it? The China issue?
Ah, yes. The
Yeah.
elephant in the room, perhaps.
Because India is facing these huge tariffs for buying Russian oil, but China's actually the largest buyer of Russian oil. And yet, no similar secondary tariffs aimed at them in this context.
It's a discrepancy many have pointed out. Vice President Vance did get asked about it on Meet the Press.
And his explanation was?
He said, basically, we have a 54% tariff on the PRC People's Republic of China right now, so we've already applied pretty hefty sanctions on the Chinese.
So essentially, we're already hitting China hard elsewhere.
That's the line. But it hasn't really stopped the speculation, that maybe the U.S. is handling its very complex, very broad relationship with Beijing differently. Trade, security. It's a bigger picture than just Russian oil.
A pragmatic choice? Maybe. Or maybe just looks inconsistent to some.
Depends on your perspective, I suppose. But India certainly sees the inconsistency.
Yeah, they've pointed out that other countries, even Western allies in the EU, were still importing Russian energy without facing these kinds of penalties, right?
They have. Their Foreign Secretary, Vikram Misri, mentioned this back in May 2025. India's position is firm. What they're doing is legal, it's market-based, and it's vital for their economy. They keep asking, why single us out?
It really feeds into this larger strategic picture, doesn't it? India isn't just reacting defensively.
No, the Modi government seems to be actively strengthening ties elsewhere. Not just Russia, but China too. PM Modi is actually scheduled to visit China for a group meeting soon. Maybe even have one-on-one talks with Xi Jinping.
So it's less about picking sides and more about building options, asserting their own path in this shifting world order.
That seems to be the strategy. Multi-alignment in action. Refusing to be forced into a binary choice.
Okay, let's shift gears slightly. The economic impact. These tariffs, 50% they have to bite, right?
Oh, absolutely. Moody's Ratings put out an estimate. They reckon it could shave about 0.3 percentage points off India's growth. India's projected growth was around 6.3% for the fiscal year ending March 2026.
0.3%. Doesn't sound enormous, maybe,
Yeah.
but for an economy that size.
It's noticeable. It represents billions of dollars, potentially impacting jobs and investment. And remember, it hits those specific sectors hard.
Right, the pharmaceuticals, textiles, electronics, that $74 billion chunk of trade, it could really disrupt their self-reliant India plans too, couldn't it? Their push for domestic manufacturing.
It could certainly complicate things, but India's economy has some built-in shock absorbers.
Like what? Strong domestic demand.
Exactly. Strong domestic demand, a pretty robust services sector. These help cushion the blow somewhat, and analysts are already suggesting diversification strategies.
Seeking new markets, new trade deals, like with the EU maybe.
Yeah, looking at the EU, boosting cooperation within the BRICS group, finding other export destinations, it's about spreading the risk, essentially, not being overly reliant on the U.S. market.
And developing alternative systems.
Yeah.
Like that rupee-ruble trade mechanism.
That's a really interesting piece. It's grown significantly, up 20% to about $10 billion in 2024. It lets them trade directly, bypassing the U.S. dollar.
Which shields them from some U.S. financial pressure, like sanctions linked to the dollar system.
Precisely. It reduces reliance on the dollar and the SWIFT system, that global network for bank messaging that underpins so much international trade. About 88% relies on SWIFT, so alternatives are strategically important.
But the tariffs still pose broader risks, even beyond direct trade. India holds a lot of U.S. debt, doesn't it? And the IT sector is huge.
Massive risks. India has around $240 billion invested in U.S. Treasury bonds, and the IT sector, worth $250 billion, employs over 5 million people. Many rely on things like H-1B visas to work in the U.S.
So restrictions on those visas could be another point of leverage or friction?
Absolutely, it's another area of concern. In response, India is exploring some pretty bold domestic reforms, too. Redirecting investment into their huge national infrastructure pipeline that's like a $1.3 trillion project. And really pushing domestic tech innovation, AI, blockchain, 6G, building resilience from within.
It feels like this whole episode is more than just tariffs. It's reflecting bigger geopolitical shifts.
I think it is. These tariffs, this aggressive economic nationalism, the America First approach, it's all part of a larger tension in the global order. It raises questions about, the sustainability of U.S. dominance.
And where does it leave India in all this? You call it a crossroads.
It really feels like one. India is the world's third largest economy, a major rising power. These tariffs could genuinely push them closer to their BRICS partners. Brazil, Russia, China, South Africa.
Accelerating things like the push for a BRICS currency, challenging the dollar.
It could certainly add momentum to those efforts. It's not just a trade spat. It touches on the fundamental structures of global finance.
Have there been critical voices within the U.S. about this strategy?
Oh, yes. Economist Jeffrey Sachs, for example, has been quite critical. He called the tariffs potentially unconstitutional and warned they could seriously damage U.S.-India relations. His view is that India is a great power with its own standing, and the U.S. risks alienating a really key partner by treating them this way.
It also kind of highlights the limits of alliances, doesn't it? Like the Quad, the U.S., India, Japan, Australia grouping. India seems to be prioritizing its own autonomy here.
Absolutely. It shows that even within partnerships, national interests and strategic autonomy often come first, especially for a country like India navigating a complex world.
And amidst all the geopolitics and economics, the human angle.
Yeah.
We shouldn't lose sight of that.
Definitely not, because these high-level decisions, these tariffs, they eventually trickle down and affect ordinary people's lives.
How so in India? Rising costs, job worries.
Both. Higher oil costs, even indirectly, can strain household budgets. Most Indians don't have huge amounts of spare cash. And small businesses in those targeted sectors, textiles, gems, they face real uncertainty. There are already reports of job losses in places like Gujarat's diamond hubs.
And potentially impacts for U.S. consumers, too.
Could be. Higher prices for some Indian goods, medicines, maybe clothing, other things. Importers facing a 50% tariff, they'll likely pass at least some of that cost on. It shows how interconnected things are.
Yeah, and fundamentally, it all circles back to the human cost of the conflict in Ukraine itself, doesn't it?
It really does. The devastation continues there. Russia's economy, partly funded by this oil, keeps the war machine going. The U.S. strategy aims to speed up peace.
But success depends on those very tricky negotiations, which haven't delivered a breakthrough yet.
Exactly. It's a high-stakes gamble, really.
So, quite a journey we've taken there. Through this whole tangled web economic leverage, global strategy, national defiance, it really shows how one country trying to influence a conflict far away can set off this chain reaction. affecting trade, alliances, and just the daily lives of millions all over the world.
It's a powerful illustration of global interconnectedness. And now, with that August 27th deadline for the full 50% tariff looming, it leaves us with some big questions.
Yeah, like what kind of world is emerging from this? Is this clash of economic power and national sovereignty actually going to bring peace?
Or does it just push us faster towards a world split into competing blocs, maybe with alternative currencies, fundamentally changing how nations interact?
The choices made now, in these coming weeks, they feel really significant, shaping global trade, energy, alliances for potentially years to come.
It's a potent reminder of why understanding these deep dives, understanding these connections really matters.
Absolutely. And we'll be here continuing to connect those dots for you.